Welcome to this week's look at the state of the New York City real estate market. This is for the week of October 28th through November 3rd. We're going to get started in a minute, taking a look at what's going on in the luxury market, the Manhattan market, and the Brooklyn market. At the end, I'm going to wrap it up. I'm going to give you some additional information, and I'm also going to give some recommendations. If you are an active buyer or seller, you definitely want to stick around for that because there'll be information that will help you be successful. There were 26 contracts signed in the luxury market last week. That is the same as the previous week. Condos outsold co-ops 21-4, and there was one condo in this group. The number one contract was apartment 14C at 20 East 76th Street. It was asking $11 million. Once again, we are seeing top contract activity for the week in the Surrey residences. This is a 14-unit condo development that is part of a combination hotel condo. The condos are the 11th through the 16th floors, and the hotel has 99 rooms. The amenities in this building include doorman, concierge, spa, fitness center, and a rooftop terrace. But let's talk about 14C for a second. This condo has a little over 2,100 square feet. It includes 2 bedrooms, 2.5 bathrooms. It has a corner great room, 25 by 20, that opens onto a quite nice terrace, 195 square feet. Interesting what is happening in this luxury market. We are continuing to see these new developments leading the charge in the luxury market. These are brand new units. Obviously, no one's lived in them before. It seems to be the thing that buyers are most seeking out. The number 2 contract was 3A at 137 Duane Street. It was asking just under $11 million, reduced from a little over $13 million when it was listed all the way back in February of 2022. This is a pre-war condo loft, so different than what I was just talking about with all this new development. Just shy of 5,500 square feet. It includes 3 bedrooms and 4.5 baths. It has a 64 by 49 foot great room. It features cast iron columns, 14-foot ceilings. This is a great example of the pre-war loft type unit. This is a 5-story, 19-unit building. It has a key elevator access. It does not have a doorman. It does have a live-in super and on-site storage. Total weekly asking price sales volume, $168,565,000. Average asking price, $6,483,269. Median asking price, $6,222,500. Average discount from original ask to last asking price, 8%. Average days on the market, 680. That is it for the luxury market. Any questions, post them below. We're going to move on now. We're going to get right to the Manhattan market and the Brooklyn market. As I said, at the end of this report, I am going to be giving you some additional information and my recommendations for best strategies for success. If you are an active buyer or seller, be sure you stick around for that. We are seeing some changes in the Manhattan market. The supply was down again for last week. 230 new properties came on the market. That is down a little over 29%. Contracts signed, we also saw that drop for the week. 200 contracts signed, down 16%. The off-market rose almost 96%. 266 properties went off the market. The supply for the month, 1,349. That is down just a smidge, over 36%. Contracts signed, however, 922. That rose a little over 13%. Off-market properties up again for the month, 696. That is up a little over 28%. If we look at this market pulse, we see it is up 1.8% from last month, 4.1% from last year. We are in neutral territory as we have been, but you can see that there has been a shift. It is rising. You would think that this means that we are moving into a seller's market. It does not tell you the whole story, however, and I'm going to get into why that is. So sellers don't get too excited. Really what it means is we continue to be in this neutral place. Let's move on now. Take a look at the liquidity pace chart. 922 contracts over the last 30 days. That is up almost 36% from last month, up almost 20% from last year. Again, we are at the top of a neutral liquidity market. But at the end, I'm going to get into with you why these charts, if you look at them in total, we can put together this puzzle. If we look at them individually, it tends to not really be the whole story. So I'm going to get into that at the end. If you have questions, however, about anything I just shared in this part of the report, please post them below or reach out to me directly at Sotheby's. We're going to move on now, take a look at what's going on in Brooklyn. And as I said, at the end, I'm going to wrap this up and give you some additional information and my best recommendations. So for the week in Brooklyn, we see that the supply is down almost 12%. 136 properties came on the market. Contracts signed down almost 10% for the week. 141 contracts were signed. The off-market properties for last week, 132. That is up over 144%. Supply for the month, 716, down a little over 38%. Contracts signed up 20% for the month in Brooklyn. 625. Off-market properties, 294. That is down about 5% for the month. Just as with Manhattan, we see this latest Market Pulse reading showing that we are up 3.6% from last month, 4.5% from last year, and also kind of moving into this looks to be seller's market. Really, we're kind of at the top of a neutral market. This is always a function of supply and demand, and we're not seeing a lot of supply, and relatively speaking, we're seeing pretty strong demand, which is why you're seeing this chart, just as the chart in Manhattan also rose. The liquidity pace chart for Brooklyn, 625 properties went into contract over the last 30 days. That is up 35% from last month and 21% from last year. Okay, that's it for Brooklyn. Any questions, post them below. Reach out to me at Sotheby's. Be sure you stick around. I'm going to give you some additional information and my recommendations. So to recap, in the luxury market, same as last week, 26 contracts signed at $4 million and above. 2 of those were in the trophy category, so $10 million and above. Not really amazing showing in the trophy category. However, nice to see the contract activity for the luxury market in general continue to be strong. Condos absolutely dominated. 21 condos, 4 co-ops, 1 condop, no townhouses, 14 were uptown, 12 were downtown. Looking at the Manhattan and Brooklyn markets, if we look at the kind of market pulse, we're seeing essentially neutral markets in both. This is a continuation. However, we are beginning to see signs of strengthening. Again, this reflects the balance between supply and demand. So we aren't exactly sure that that is the truest measure of kind of a strengthening market, but we're going to look at the rest of these details and kind of get a little forecasting going here. The supply for the week was down. We're at about 6,762 properties in total in Manhattan. Brooklyn was also down. We're at about 3,326 properties for Brooklyn. This is likely, we've reached the top likely for supply, new listings coming on the market. We're probably have peaked. We'll have to wait and see what happens after this election, but we're kind of at our peak for supply. Contracts signed, we're down for the week in both Manhattan and Brooklyn. That is very likely to do with this kind of pullback just pre-election. once the election happens, people will likely be able to focus on other things. The off-market properties up for the week and the month in Manhattan, and in Brooklyn up for the week and down for the month. So let's take a look at this chart. Manhattan monthly contracts signed. Manhattan buyers signed 999 contracts in October, which is above the seasonal average. This is particularly notable because the last couple of years have been quite weak in terms of contract activity, and perhaps this is a hopeful sign for a stronger spring market. If we look at the Brooklyn monthly contracts signed, we will see that in October, buyers signed 666 contracts. This is also just higher than the seasonal average, and again, comparatively to the last few years, this is quite a feat. This has been accomplished only a few times since mid-2022. I don't have a chart to show to you for this, but looking at the supply versus demand, this is through October, as compared with the last 16 years. If you want to know how 2024 is comparing to these other years, from a supply standpoint, we are about midpoint in terms of this kind of comparative chart over the last 16 years. We're about halfway. If we look at the contracts signed, we will probably end up in the bottom half of the chart, of this 16-year chart. It's important to note that the last 4 years have seen the lowest demand as compared to the other years over the last 16 years. So, definitely we're doing better than those other years. We'll probably finish better from a contract signed standpoint. But, we've really been in the doldrums the last 4 years or so. So it'll be very nice to see a change in that. Hopefully the spring will bring better things. So if you are a seller, here's some things to remember. Yes, there is some stronger demand. However, especially going into this election, things have quieted down. You might have a little advantage because you don't have quite as much supply. However, this is still a challenging listing environment. And if you look at this climate index chart, you will see that, let's say back in 2022, you can see how high the climate index read was. The higher the reading, the easier it is to be a seller. All right. You can see that where we are all the way to the right here, we have risen a bit. We're definitely coming out of, let's call it the worst of it, but we are still in a fairly challenging listing environment. And it is important to remember it's very much dependent on the type of property and the condition of the property. Condos are definitely selling more quickly than co-ops, and properties that are in mint or new condition are selling the fastest. So if you're an owner of a co-op or even a condo and it needs some work, you may find that you just don't have as many takers for your property. Hopefully we will start to see some things turning around. But what it means is if you do want to be a seller in this market, do remember to keep your asking prices in alignment with the market. From a price action standpoint, we see the prices holding. However, as I said, it is very much case by case. So don't be too ambitious with your asking price. Try to get your deal done sooner rather than later. Buyers, as I mentioned, this is very likely the peak of supply. The top may be in on this. You may see some new listings coming on after the election. Very likely, though, the next big influx of new inventory will not happen until sometime in whenever our spring market starts, sometime after the first of the year. Again, remember, prices are holding fairly steady, so do keep this in mind when you're making offers. If something is new to the market, you can safely assume there's probably less negotiability. If they've been on for a while, you can probably safely assume there's a little more negotiability. All right, that's it. Those are my thoughts and my recommendations. That's it for this week's look at the state of the New York City real estate market, as always, my thanks to the Olshan Luxury Report and to Urban Digs. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news about what's happening in the New York City real estate market. In the meantime, be sure you get out there and vote, and take care.